Alright, y'all, it's Model Micro and we're back with another video. Today we're going to be looking at my May 2026 NFP trades that I did. Is just not going to take up too much of your time because I did look through essentially this entire trade plan on my previous video, but I did want to make one specifically for just what I was looking for, and why I went into the spreads that I did, and the timing that I did them at, and the patience and waiting for the setup throughout the entire month. The actual trade realistically only lasted a week. I was only in the trade for a week, but I was waiting for the confirmation the entire month. And so we'll see here. SPY NFP high of 738, QQQ NFP high of 711. All right, so the data was released on the 8th of May, and we see here on May 14th that we finally, after a little bit of chop and inside range from Friday's open. Okay, sorry, I'm jumping the gun a little bit. Let's look at the chart here. And we see here on this daily candle here on the 8th, we have just this huge green day, and that set the bar for what we should expect moving into May. Whether we chop inside, looking for at least 2 full day open and closes above the NFP highs, or 2 full day open and closes below the NFP low. And so we have that huge green day, and then we see here on SPY as well. Honestly, not that big, but nonetheless, it still worked, and I'll show you why it worked and how it worked. So Q's a lot cleaner this month, but we see here on the 14th, we finally got a full day open and close. I was tempted to actually chase here with the 685, 675 put credit spread for $1 premium, getting my 10% return on equity. But I'm folding my hands for now as we don't have a second daily candle above NFP high. As we see here, there was a little bit of manipulation. We see here we had a full day open and close, and you can think that this would be the start of a breakout, or a retest and breakout, but again, it's manipulation. It ended up being manipulation, and we see that with the sell-off going back into the range and ultimately back testing the NFP lows just 2 days later. Oh, sorry, not 2 days later, but we see here on that Friday of the first week, we had a sell-off back into the range, and we fell all the way back even below the NFP lows, which is really insane to me, to see how that worked out. But so that would actually have been a huge red flag if I did chase there. And that's why you gotta, wait, be patient, because the setup will come, and you will be able to trade for it. Even, like I said, even if you're only in the trade for a week, it still plays out to how you want it to play out. We see here on the 15th, scraped out another full day open and close above the NFP high, indicating that the level we're currently at should hold moving forward. Q's is a lot weaker and is sitting in between its NFP range. No room for weakness on Monday and Tuesday. This was on a Friday. If so, we'll magnet down to 734 on SPY and 700 on QQQs. That is because the reason why I say 734 and 700 is because of these NFP lows and high NFP lows. If we're not able to hold the NFP highs, the market will immediately, or should I say between 24 to 48 hours, retest the NFP lows, and that just comes from a re-rating. If we don't want to give the market a bigger a bid at this very moment, it'll get re-rated down to where it should be, and it would be the NFP lows. And if that doesn't hold, then it would be the next level. I did a full breakdown on that and how you could look at that in a bigger time frame, but that's just a simple case here within just the month, that if the NFP highs don't hold and we're in the chop zone, or sorry. Then we fall into the chop zone, and we should expect the NFP lows to be the target downside for the short term. And again, that'll come within 24 to 48 hours. So if we stayed in that range, which we did, it would be a straight magnet down, and that's exactly what happened. As we see here on the chart, as we were talking about earlier, that's exactly what happened. On the Qs, we fell even below the NFP lows. SPY fell below it as well, but was able to, form a doji, it looks like there. And so Monday comes around, and like I said, as mentioned, we went straight to the NFP lows. The lows were immediately bid up, ironically, from a fundamental headline, and we still sit in the chop zone. So again, no trade. You could trade around these chop zones and collect premium, but I would say that's just a day trade. Honestly, I do not like trading around and doing an iron condor just because you have a chance, not just a chance, but that one of them will be attacked. And yes, you can play around with it and be active, and because one of them is getting attacked, the other one will be really green. I just don't like playing that game, and I'd rather just not have to deal with that and cut off one of the short legs, and whatever the case may be. I would just look for that confirmation and see whether we want to continue upside or downside and want to hold that. So I don't like trading iron condors, but you could, and you can maybe do that on a day trade basis. So the next day comes in, and we have on the 19th, both SPY and QQQ sitting at / slightly above NFP lows, definitively in the chop zone. Wednesday weakness will be indicative of sellers likely winning, and confirmation is very possible, but a bounce will likely lean towards buyers winning with only 9 days remaining in the month. And what I mean by that is time is running out. You kind of have to make a decision, and that works in our favor, and that works in the market favor. It works in our favor because we're able to actually trade for that, and not just for that, but to that. But then also it works out for the market because you actually get at some sort of bias and what to expect moving forward. So because I was feeling a bit more optimistic here on the 18th, the 19th came around, and I was like, okay, because we don't want to go any lower, we might just have to push higher. And if we push higher, that's likely going to hold. And the reason why I'm thinking we're going to push higher is because if you're not able to go down below and definitively below the NFP lows, you got to go higher. You got to be re-rated again and see a higher price on the index. I don't make the rules. May 20th, sellers weren't able to push the market any lower in the first hour of trading and led into a squeeze to the upside. Again, you had a sell-off in the beginning, and you just couldn't push it any higher. Or any lower, sorry. So what do you have to do? You had to push it higher, and that's, again, exactly what happened. Led into a squeeze to the upside towards the end of the day. Firmly above NFP highs on SPY and sitting on the NFP highs on the QQQs, will look to enter a put credit spread tomorrow following NVIDIA's earnings. I did not want to hold any risk, any fundamental risk, and we didn't get a definitive second full day open and close. So I am just still, even on the 20th of the month, still sitting on the sidelines. Then the 21st comes around. Break and retest of the NFP highs on SPY and QQQ in the morning, and we had a fundamental news come out regarding the Iran war. This gave me confidence going into Friday, and next week we wouldn't face a fake out. Enter the SPY 730-720 put credit spread, or entered credit spreads, put credit spreads, expiry 5/29, just 8 days from then, for 96 cents, or a 9.6% return on equity in 8 days. 96 cents times that by 100, because the underlying contract is 100 shares, and you have a $96 premium for $1,000 collateral, 9.6%. So that was Thursday, and we see here on the price action, going back to it, on the Qs it's not as clean, but on SPY this is cleaner than, it's very clear that you wanted to push upside, and it did look like a flag. It looks like we were flagging, but again, the confidence that we didn't want to push lower earlier in the month, I just took that and ran with it, and maybe it was a little bit too optimistic, because this wasn't a full day. The previous day on Wednesday wasn't a full day open and close above the NFP highs, but you had a retest of the NFP lows, and you just didn't want to go lower. Things like that is why I just had the optimistic to enter the trade on the 21st, at the end of the day. And we see here on Friday as well, we had a red day, and it didn't really look all that strong. And so regardless of what I felt, because it was above the NFP high, I was on Twitter and I was looking at people saying that this candle here wanting to be an evening star, and saying that this is the top. Well, it wasn't the top, and the reason why I said it wasn't the top, just because that would be our second full day, not second full day open and close, but a second day close above the NFP highs. And not only that, but you had two chances to go lower. You had a close below the NFP lows on the 19th, and then you had a retest the very next day, and you still couldn't push it lower. That's why I got confidence. So Friday came around, red day, but another day to give more confidence in going into the long weekend. And because it was a long weekend, I just wanted to know for sure that I was gonna be able to enter a trade and avoid a huge green day on Tuesday. So Friday comes around, strong open and close, and we continue pushing higher. Or strong open and we continue pushing higher. Eventually that became a red day on SPY, green day on Qs, but nonetheless officially got our second full day open and close. Not necessarily, but close enough. So barring any major fundamental change, we will hold above the NFP highs until the end of May. Enter QQQ $700, $695 put credit spreads, expiry 5/29 for 50 cents, or 10% return on equity in 7 days. The reason why this 50 cents is still 10% is because the $5 spread here only takes $500 worth of collateral, while the $10 spread here on the SPY trade takes $1,000 of collateral. And so long weekend comes, and actually I would be down 20% going into the long weekend from this entry. If I waited till the final minute of the day, I could have gotten a much bigger return. Again, I was down 20%, but nonetheless, these were sitting at 70 cents, and I could have, in theory, gotten a 14% return in a week. But nonetheless, entered those trades. So now my position is set. My position is QQQ $700 put credit spreads, where I cannot have QQQ fall below 700 and SPY fall below 730. Overall, a bullish outlook. Where is that, guys? Where is that on the map? Let's just look at the map. Q's at the NFP low. That's at the NFP low. Something we know definitively, or at least we almost know definitively, that we're not going lower. We're just not. You had a chance again on Tuesday, and then Wednesday when you back tested it on SPY, and you're just not going lower. And we're all the way back here. Mind you, we closed Friday at 746, and I was able to get a 730 spread. That's below the NFP low. I mean, crazy. Absolutely insane. QQQs, I did wait a day. And so because of that theta little decay, I wasn't able to get all that close. But even then, I mean, if I waited, I probably could have gone 50 cents for, a 695 put credit spread. And that would have been, again, below the May NFP low. Wild. And if you want to look at the bigger time frame, I mean, we're in kind of no man's land right here. We're above all these days. We see SPY as well. We're above all these days. So, if the NFP low wouldn't hold, I mean, that would have been even bigger problems. We would have back tested 697. My gut tells me at some point this year we're gonna retest that, but that's for another day, another video. But nonetheless, I mean, look at this. I was able to enter a trade that was 2% lower. Not only would you expect 710 to hold, the NFP highs to hold, but then to fall another percent or two all the way back to the NFP lows, that's just not going to happen, especially not in a week. And you're able to get 10% on that. So, nonetheless, Monday came around, or Tuesday came around, sorry, and we were bright green. And from then on, it was like, okay, like, we're just not going to go lower. And, Tuesday came around, and I seen, where we opened and how the day went, just, for sure. Right, I was still following it. But the next few days, you know what I did? I did exactly this. I went to sleep. I didn't even wait. I like waking up early and seeing how the market is doing and following the markets. But I promise you, I went back to sleep. I'm in the West Coast. I am not going to stay up from 6:30 all the way to 1 p.m. to just watch these decay and theta decay happen. It's boring. I'm watching paint dry, and I'm not an active trade. I'm 3% away, 4%, and I have just so much confirmation. I'm going to sleep. We could have a huge red day of almost 1%, and if we're not below 710, I don't care. And because I know definitely the market is just not gonna fall below. And so I collected 10% and I didn't have to do anything. In theory, right? I was looking for the setup the entire month, but after I entered my position, I fell asleep. I didn't even need a stop loss. This isn't a day trade where you set a take profit and a stop loss. It's not that. And it was easy, simple, and conservative. Everything you want, everything that you want to check off. It's not difficult to do. It takes a lot of capital, I'll say that, to make it, not worth it, but quote unquote worth it. But it works. It works. And so these Z's, maybe on the 26th, that's a little bit of a reach. But I promise you, these next 3 days, I just went back to sleep. And I slept another 2 hours. And 6:30. What do I gotta be up at 6:30 for? So, anyways, guys, that was... okay. And to show you guys what ended up happening, just to not, pat myself on the back, we just went higher. We just went higher. The Tuesday came around, we had an inside day, and again, you have all the furus telling you, oh my god, this candle is bearish, it's an inside. I don't give a fuck. Boom. Oh my god, you had a hammer here. I don't care. You don't gotta do any sort of insane TA. Doesn't matter. You don't need to even do candlestick TA. Literally just have these levels pointed out and you're good. You're good. That's all you need. You just need your levels. You need to know where the price is, and you need to know the rules of the NFP, right? 2 to 3 full day open and closes, and that's it. And don't trade the Monday or the Friday of of when the NFP data comes out. That's it. That is it. So all these dumb wicks and smaller time frame, you don't even got to do all that. You don't have to be in front of a monitor and looking at the 30-minute, looking at the 5-minute, looking at the 15-minute for an entry. Like, you can enter at the end of the day and see where we're at. The end of the day will give you confirmation of what's gonna happen. I'll tell you that right now. You don't need a quote unquote entry. So, or you do need an entry, but you don't need an entry signed from a smaller time frame. You would get it once you get the full day close, second full day close. So yeah, this week we opened up Tuesday and then just didn't fall below. We didn't even test Tuesday's lows the rest of the week, or last week's high. We barely touched last week's high, and they just kept on pushing higher. So anyways, that was it. We got our 10%. It came really quick after we entered our trade. I personally like having more theta decay because I'm able to be a lot more conservative and farther back from the NFP low. Even though I am saying that the $700 put credit spreads on Qs and $730 on SPY is safe and conservative. It is 100% because it's below the NFP low. It's still a little bit risky just because you are just playing close to the fire. You're forced to do weekly spreads instead of a monthly spread where you're able to go 5, maybe even 6% behind depending on where the VIX is. And that's insane. I mean, 5% back from the NFP lows, what are we talking about? Like, that would be back here in February NFP highs. In theory, like, if you knew that we were gonna push back to the NFP highs, you easily could have entered at Wednesday's close, sitting at 734 here. You could have entered, put credit spreads at $700, $795 spread, $790 spread, whatever you want, $700, $790. You could have gotten a good premium. And that's all the way down here. That's all the way down here. But I like confirmation. I like knowing what the market is going to do. I don't want to guess. I'm tired of guessing. And you should be as well. And this is what I believe is the best strategy to go with. So nonetheless, guys, it's been Modern Micro. I said it was going to be a quick video, but I don't know. I don't even know anymore. I like yapping. But I'm going to do this every month and do continuous updates throughout the week to see where we're at and really just be transparent. I love being transparent. A lot of people, they shy away because they want to seem like they're the smartest person, but that's not my thing. I'd rather take criticism and honestly, in doing so and doing this as well, it keeps me accountable and not cheat on the rules and because I'm actually telling people, hey, this is what I do and this is how I do, and I stick to the plan, and as a result keeps me disciplined, makes me a better trader. And because I'm so transparent, telling you everything that I'm looking for, I hope it makes you a better trader as well. Nonetheless, it's been Modern Micro, and I hope you all have a great rest of your day.